Well, those are the Divi's numbers on your screen, and it's looking like a complete miss both on the top line as well as the bottom line. So it's coming at around 1,854 crores in terms of revenue. The street was anticipating around 2,200 odd crores this time round. So the street was anticipating around maybe a growth of 10 to 11 odd percent. And remember, this compares to around 2,200 odd crores that they did in the previous quarter. So it is definitely lower on a sequential basis and lower versus our expectations as well. There's been a steep downtick in terms of the net profit as well. So 493 odd crores is what it's come in at. Remember, last quarter it was at around 659 odd crores, and the street expectations were around 579 odd crores. We just want to wait by for the margins for Divi's, because remember that the key USP of Divi's Labs is basically the high margins that they managed to maintain. They have maintained over at least 40% in terms of margins in previous quarters, and it would definitely be a bit of a disappointment. So that, as you can see, the EBITDA is coming at around 621 crores. The street was anticipating over 800 odd crores in terms of a performance. Remember that there were multiple factors that the street was looking out for. Q1 FY23 was a big disappointment for Divi's in terms of numbers, as the margins had dipped over almost 600 basis points on a Q-on-Q basis, as the molnupiravir opportunity had tapered. Plus, there was a slowing base business as well. So the street was anticipating that at least there would be a Q-on-Q recovery which would come through this quarter. Stability in numbers on a Q-on-Q basis is at least what the street was looking for. It seems as though they have not come through with those expectations, at least on a sequential basis. And that's the reason why you're seeing this steep disappointment which has come through for Divi's Labs. The stock down around 6 odd percent. Remember, there was weakness in the custom synthesis business, which was basically one of the reasons was because of the reduction in supplies of the molnupiravir API, which is basically the COVID-19 drug. But separately, the street was anticipating any kind of weakness in the base business X of molnupiravir. And that's probably one of the reasons why we're seeing this kind of reaction, that maybe there is a disappointment which has come through in the base business for Divi's Labs as well. Net profit is at around 493 odd crores, and maybe we should pull up the margins and see what they've come in at on a calculated basis. Like I mentioned, the Divi's Labs margins have been generally even above 40 odd percent. They have one of the best margins within the entire pharmaceutical space, and that's the reason why they're generally rewarded as much as they are. And if in case there is a sequential disappointment in the margins, then the street would probably be unhappy with it, because there was a stability in the Q-on-Q numbers that the street was anticipating. So EBITDA down around 24 odd percent, coming at around 621 crores. So margins, as you can see, have come in at 33.5%. This compares to 38% in the previous quarter, or rather 37% in the previous quarter. So they've come in at 33%. The street was anticipating 38%. I think this is probably one of the lowest margins that Divi's has ever reported in its entire reporting history, or since I've been looking at the numbers at least. So it's definitely been a disappointment which has come in the margins. As you can see, 33% is what they have reported. It's a multi-quarter low when it's coming when it comes to the margins for Divi's Labs. Prakash Diwan is with us to tell us about his perspective on the numbers. Prakash, there was this note on the 11th of October where an IIFL note had estimated that the revenue could decline over 20% on a Q-on-Q basis, and overall there could be weakness in terms of the numbers. What is your sense in terms of what Divi's has reported?
So I'm sure, even the poll of 2,200 odd crores that was expected from the company, that's been missed badly. So, the poll had anticipated weakness, and this is much beyond that. So I think definitely this is a howler of sorts. Don't expect this from Divi's. And there was not any indication that it would be so dramatically low. So I think that 1,850 odd is definitely a big miss.
Okay, but margins, Prakash, how would one look at the margins for Divi's? Because the premium has generally been given because of that 40% plus margins that they've reported, or maybe even 35% in a bad quarter. Now they've come in at 33.5%.
Absolutely. So, that's exactly why even the profit miss of almost like 80 crores from what was expected at 575, 80 is a dramatic miss. So not only revenue, also margins at 33 odd is not something which these are very pedestrian numbers, right? I mean, you would not expect that from a company of this caliber. So we'll really have to figure out what's led to all this. This is very similar to what Lupin went through a few years back, where everything started crashing down in terms of revenue, in terms of margin, in terms of its pricing power. So there's something definitely that's beleaguered. I mean, the stock is beleaguered with, and we'll have to figure that out. But it's a miss on all counts. Worrisome so on the margins as well, and then hence you could slice things like the EBITDA and everything, and why is it so down? But then I think intrinsically that the margins itself is a big question, and there's something that we'll need to hear them out on. To assess whether this is going to continue, or is it something we have to live with for more.
I remember last quarter the company had said that, we could see quarterly variability in terms of margins, but the long-term margins will be in line with previous estimates. So let's see whether or not this is an actual aberration in terms of margins and whether they are intact on a long-term basis. But Prakash, one thing about Divi's is that despite the correction, it still trades at a premium. If you look at it, FY24 estimated EPS is around 100 odd rupees. It's still trading at over 30 odd times or thereabout. What is your sense? Do you think that there will be a shave off in terms of EPS estimates now?
Yes. So, unfortunately, both the P multiple and the EPS could get contracted, is my sense. When things go bad, and as you said, if the variability is on a quarterly basis, but it kind of evens out towards a mean reversion on the higher side, it would still be okay. But I don't think these numbers give you that comfort that it would happen in a hurry, which means that for at least the next 2-4 quarters, the premium valuations would get shaved off, and so would the estimates on earnings, because the market would love to reward earnings which will restore itself. The visibility needs to come back, which doesn't seem to be the same, because the company's been warning us, but this is far more deeper than what probably we took it very lightly. The market took it very lightly. Is what I would.
This could more be about the base business declining and not just a molnupiravir opportunity diminishing. Correct?
Yes. So that's why So that will exactly define how secular the thing would be in terms of this thing. If it's the base business itself contracting, then it would take that much longer to come back and retrieve. And hence the valuations would definitely be deferred till then. The premium valuations would have to be deferred till then.
Okay, all right, Prakash, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So it's definitely a disappointment for Divi's Labs. Just to put it simply, the street was anticipating a revenue growth on a year-on-year basis, and they've come in with a decline. Not to mention that they have missed estimates on the profitability. As you can see, it's a decline in terms of profit versus what they reported same time last year. And the revenue is down around 7% on a year-on-year basis, with margins which have come in at a multi-quarter low. Remember, the conference call is at 2 p.m. this afternoon, so we'll get more details in terms of what the management is thinking, what the guidance is. We'll tune into that and give you more updates. Well, with that, it's a wrap on Halftime Report. Business Lunch up next. Stay tuned.